$800 billion. The valuation placed on artificial intelligence today. Tonight, we trace exactly where this money flows and who collects it. To understand this money machine, understand three companies: Microsoft, OpenAI, and Nvidia. One circular system, three enormous beneficiaries, built on each other's revenue. Microsoft invests $13 billion into OpenAI. OpenAI builds every product on Microsoft Azure. The money effectively never leaves the same corporate ecosystem. Azure reports massive AI-driven revenue growth every quarter. Its single largest paying customer, OpenAI, the company Microsoft already owns 13% of. OpenAI uses Azure Compute to train its models. Those models generate revenue. That revenue returns to buy more Azure. The loop closes, then repeats. Now, enter Nvidia. Every AI model demands GPU chips for training. Nvidia controls 80% of this market. No viable alternative exists at scale. In 2022, Nvidia was worth $300 billion. By 2024, $3 trillion. 10 times in 2 years, driven by one chip. The H100. One H100 chip costs $30,000. Training a large model requires tens of thousands. Nvidia cannot manufacture them fast enough to meet demand. This is the circular revenue loop. The same capital cycling across three balance sheets. $800 billion in apparent new wealth, mostly recycling. Wall Street calls this $800 billion growth. But the underlying reality is the same capital recycling between three deeply interconnected corporate entities. Sam Altman says he needs $7 trillion to build his AI infrastructure. $7 trillion, larger than every nation's economy, except two. The Gita names this precisely. Vyavaharika, what appears true. Paramarthika, the deeper truth beneath. In today's AI markets, these two layers are dangerously separated. Top 10 AI companies carry a combined valuation of $800 billion. Combined revenue, $80 billion. A 10 times multiple on a depleting input. History has seen this before. The dot-com bubble had genuine technology at its core. Investors still lost 90% before reality corrected the valuation. The ancients called this Maya, illusion so convincing it feels entirely real. Until it dissolves, today's AI valuation carries this precise quality. The disciplined investor never chases the loop. The first step in your Nivesh journey, separating genuine wealth creation from capital inflation. Beneath the narrative, building real wealth in the AI age requires one discipline: signal over noise. Systematic investing, verified instruments, measurable cash flows, physically real assets. Systematic investment platforms let you participate in India's real growth, entirely separate from speculative AI valuations. Your Nivesh begins here, not inside the loop. Now, the second layer. Beneath the valuation story sits a structural problem the industry will not broadcast. They are running out of training data. AI learns by consuming data, every text, every image, every conversation humans ever created. The total sum of human knowledge is finite and measurable. Epoch AI estimates quality training data depletes between 2026 and 2027. After that, what does the machine continue learning from? The answer is disturbing. Every book ever written, every article ever published, every conversation ever recorded. AI has consumed most of it. The library of human knowledge approaches its final page. The proposed solution: synthetic data. AI generating content to train itself. Researchers have documented the catastrophic consequence. They call it model collapse. When AI trains on AI-generated data, errors compound. Small biases amplify across generations. The model grows increasingly confident about increasingly incorrect information. Degradation is systematic, like photocopying a photocopy. Generation by generation, signal decays toward noise. Oxford, Cambridge, MIT, 3 independent 2024 papers, same conclusion. Model collapse is real. Google mines YouTube. Meta mines Instagram. OpenAI negotiates globally with publishers. All three know the truth. Data acquisition is now the silent arms race. The data wall creates a specific opening. Tools that extend human cognitive capacity, rather than simply feeding more degradable content into an already struggling machine. Tools that amplify human intelligence represent the AI economy's only sustainable layer. Human cognition is the one scarce input no machine can self-generate. Now, the third layer. The energy story. Training one large AI model consumes electricity equal to an American household's entire century of usage. Data centers will consume 9% of U.S. electricity by 2030, exceeding all American residential lighting. The grid was simply never designed to carry this load. Virginia, the highest data center concentration on Earth. Grid operators are already rejecting new connections. The infrastructure cannot absorb more load. This is today. The AI revolution is 21st century technology, running on 20th century infrastructure. Coal plants from the 1960s are kept online specifically to run AI training workloads. September 2024. Microsoft announced restarting 3 Mile Island, dormant since 2019, to power their AI data centers. Nuclear power re-entered the conversation. That 20-year agreement sent a signal no press release could match. The energy crisis is acute. The entire industry is returning to nuclear. Now, Constellation Energy, operating 3 Mile Islands, gained 40% in a single week. Investors understood immediately. Nuclear was being repriced as dedicated AI infrastructure. 3 Mile Island was only the beginning. The real transformation: small modular reactors. Factory-built, shippable, operational in years. Designed specifically for industrial data centers. Google signed with Kairos Power for SMR electricity. Amazon invested in X Energy. Microsoft backed TerraPower. Earth's largest technology companies are quietly becoming nuclear investors. The SMR vision, a data center with its own nuclear reactor on site. Zero grid dependency, zero market exposure, complete energy sovereignty. This is Sthira. Even SMRs carry constraints: land permitting, local opposition. The most radical infrastructure thinkers are already looking beyond Earth's atmosphere. Low Earth orbit. Microsoft has filed patents for orbital data centers. Low Earth orbit delivers uninterrupted solar power. 24 hours daily, unlimited energy, no land, no zoning, space-based solar power. NASA proposed it in 1973. ESA and JAXA developed it for decades. The missing piece was always affordable orbital access. SpaceX Starship reduces orbital delivery from $10,000 to under $100 per kilogram. That single shift makes space infrastructure viable this decade. India's Pathfinder program and ISRO's growing capabilities position India uniquely in this global transition. This is not only America's story. This is global infrastructure. As the world moves into digital and orbital space, your digital identity requires protection. The shield for your digital identity is now foundational infrastructure. Now, the final chapter. The financial pivot. AI valuations contain circular inflation and unresolved energy dependencies. Where should the thoughtful investor actually position capital? The pivot moves away from circular revenue inflation towards Sthira Sampada, stable wealth, whose value derives from physical reality, not from sustained narrative. 3 components: digital Maya, circular AI exposure on one side, hard assets, energy infrastructure, gold, networks on the other. 2 foundations, entirely different durability. Energy infrastructure companies are the AI era's unglamorous winners. Contracted revenue, pricing power, unreplicable physical assets. Constellation and Vistra both tripled in 2024. Central banks bought record gold in 2023. China, India, Turkey, Poland. Reducing dollar reserves, systematically adding gold. The 5,000-year signal is unmistakable. Historically, when institutional capital doubts digital valuations, it rotates toward gold. That rotation signal is now visible across multiple sovereign wealth fund disclosures globally. Third, diversified mutual funds with exposure to energy infrastructure, commodity producers, and regulated dividend companies. These categories historically outperformed during technology valuation corrections. Systematic investing, Nivesh with Dharmic intent, means choosing instruments whose value is real. measurable, and not dependent on any narrative continuing indefinitely. For the Indian investor, SIP platforms with energy and hard asset exposure represent the first step in your Nivesh journey toward genuine Sthira wealth. India's position in this transition is uniquely significant. World's largest planned nuclear expansion, fastest renewable build-out, among the world's fastest-growing capital markets. The complete synthesis, money loop, data wall, energy crisis, nuclear pivot, orbital future, hard assets, 6 nodes. The full picture is finally visible. Chanakya wrote 23 centuries ago, Chal Sampada follows narrative. Sthira Sampada rests on physical reality. This distinction has never been more consequential than today. Practical positioning, energy infrastructure at the foundation, hard assets in the middle, selective AI chip exposure at the top. This is the Dharmic portfolio. Mutual fund investments are subject to market risks. Please read all scheme documents carefully. This content is for financial education only, not personalized advice. Loop real. Data crisis real. Energy real. Foundation or illusion, your only question. If this changed how you see the world, like the video, share it, and subscribe to GyaanGatha for deeper explorations.